Welcome back, everyone. I hope you're all doing well. Today, it looks like Larry Fink, the CEO of the largest asset manager in the world, has publicly stated that he is now officially a Bitcoin bull. On top of that great news, we'll take a look at Bitcoin's price and go into why I think it could drop another 5 to 10% this week. And then towards the end of the video, we're going to go into some important macroeconomic data that just came out on the labor market and how that affects the price of these assets. Now, if you're brand new here, we talk about the most important technical and fundamental metrics happening in the markets to help you become a better investor. So right now, Bitcoin's price is sitting at around $30,200. As you can see on the weekly chart, the candle right now is looking very weak to the upside. And as we drop down to the lower time frames, you're going to see how it's starting to play out in this range and how it could drop a little bit lower. Now, before we go into that, I want to play a 30-second clip for you guys where Larry Fink, the CEO of BlackRock, the $9 trillion asset manager, is basically publicly stating on live TV why he thinks Bitcoin is the best asset in the world. Now, just a few years ago, he was basically talking about how it's used for money laundering and that he is never going to touch it. But now he has conveniently changed his mind.
It's digitizing gold in many ways. Instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country or the devaluation of your currency, whatever country you're in. Let's be clear, Bitcoin is an international asset. It's not based on any one currency.
Now, two really big things that I want you to take away from that video is the first one is that he basically called it a digital version of gold, which if you've looked into Bitcoin, then you know that people have been talking about this for over a decade now. But now institutional money, really big people are starting to realize it. And the second thing is that he says it's an international asset, basically not being tied to any foreign currency, which is extremely important because we're seeing that fiat money or government created money is now starting to fall apart. And as a lot of people want to de-risk from that, they're going to have to either go to gold or the best asset, Bitcoin. Now, this comes at a very important time as well because ARK Invest just released their monthly report on Bitcoin. And one of the things that they talked about is the Bitcoin long-term holder supply. Now, you can see that out of the 19.4 million Bitcoin that are in circulation, nearly 70% have not moved in at least 1 year, being at an all-time high, as you can see indicated by that green line. Now, why is that important? Because if 70% haven't moved in over a year, that means people are going to be hodling, and with more institutional money coming in at the last second with all these Bitcoin ETFs, they're going to have to really ramp up prices for a lot of these hodlers to sell. And so what that means is with low supply and high demand, you could expect prices to continue to skyrocket to get these people to even sell their Bitcoins. But in the short term, we have to talk about Bitcoin's price and why it could be dropping a little bit more for like the intraday traders and just where Bitcoin's price could be going short term. Now, one thing that I pointed out prior is that when you look at the last 2 weeks, obviously Bitcoin has struggled to stay above the price level of 31,000, which we can indicate with this line right over here, kind of this white line. So you could see that on the weekly, we've had multiple rejections all the way back here just a few weeks ago, and obviously 3 weeks in a row where price hasn't been able to sustain above 31K for the weekly chart. So with this price action, what we're seeing is that there could be a potential drop in Bitcoin's price. And as we drop down to lower time frames, I think you'll agree with my point. So let's drop down to the daily and let's look at what's happening. So obviously since we were over here March 25th, so basically over the last several months, we've kind of been in this range, right? Bitcoin reached the high, and then since then it kind of just consolidated. We did have one more push up, but again, rejecting that precious level of 31K. And now over the last week or two, we've kind of been consolidating in between 31K and right around 29,800. So it's important to note the most recent daily candles, how they've been acting. Now you could see that this right here is a very bearish candle. What we had is that we had a run up to the highs, probably took a lot of liquidity once we look on lower time frames, and then it basically engulfed the last few days of trading, right? Several days of trading. So that's a very bearish indication showing us that momentum was stopped by the bears with this candle, right? We took a lot of liquidity or money in the markets on shorter time frames. And then what happened is that we closed very bearish, basically leaving no wick to this downside over here. And so now what we're getting is a minor retracement in the day, where you can see we have around 5 hours left. But I personally think that we could continue to fall and maybe drop a little bit lower. Now, how low? If we take a look at the daily, one important thing or one tool that I like to use is whenever we have a massive run up to the upside or the downside, typically, not always, but typically, there's a retracement in these types of big moves. Now, if we look back at the past, you can see how Bitcoin had a large rally right over here. And if we take our Fibonacci tool and go from the bottom to the high of this move, you can see that it retraced this entire move at least 50%. Now, if we just take it to this high over here, you can see that the retracement is only 38%. Regardless, though, it did retrace, because usually when there's a massive run up in price tends to retrace. So if we take that same methodology and we apply it to this bottom and go all the way to this top, you can see that at least we have yet to retrace to this level of 38%, which if you look into Fibonacci's, 38, 50, and 61% are very important numbers. So this retracement will come down to around 29,000 in terms of price. A 50% retracement would fall to 28,000, and also coincides with this very important zone to our left, which I'll kind of mark out in this box right here. So these are some very important zones to consider, 29K and 28K, somewhere in between that range. Now, if we drop down to the hourly, this is where you can get a little bit of a better picture of what's going on in Bitcoin's price. Like I said before, we were consolidating in this range from 31K to basically 30K, let's say, right? We continued to chop. Anytime we got down to the zone, we would reject, just back and forth. And then right over here, this candlestick, this is when Gary Gensler rejected those Bitcoin ETFs. Now you could see that if we mark it out with a red line, let's just say that this line represents a lot of short-term buyers in the market. And this is where a lot of their margin was, or let's say their stop losses. You could see that it's no coincidence that this wick came down below these lows and took them all out, and then immediately changed its direction in price. Now, what we had immediately after that was that we had a run up on price, or if we do the same exact thing to the top here, you could see that price once again came above these highs and then rejected to the opposite side. Now, the reason that I'm somewhat bearish on this is because if we wanted Bitcoin to be bullish, what should have happened, or what was likely to be a bullish scenario, is that if we had a close above 31K and then we had price do something like this, where we, on the higher time frames like 2 and 4 hour, we had price come above, kind of show that it was treating it as a floor now, some type of like price action or wicks to the bottom, and then we would have our price reversal. Instead, what we had was kind of like a liquidity wick. And what I mean by that is whenever you have very well-known highs in the market, this is definitely where sellers are looking to sell, but their stop losses and their margins are right above these highs. And so what we had was kind of a liquidity grab where price was coming up here. I'm sure we had a ton of sellers in the market. And then you had a wick go above all of that price action and immediately change directions. So now what's happening is that when we take a look out, there's less of an incentive to go back up to these prices. And now that we have price action kind of showing us that we have liquidity right around here, there's more of an incentive to go back down to the price of 29,500. And again, like we talked about in recent, now that we have such a large push to the upside, right, even going from this low all the way up, it would make sense for price to at least retrace 50% of that, or down to this blue zone, where I think on higher time frames, it makes more sense for Bitcoin to continue pushing down, because we've already grabbed the liquidity from the top up here. And if we go back to the daily, you'll remember how those candlesticks looked, right? This alone is very bearish. We have a massive wick showing buyer exhaustion, and then a massive close that is bearish, showing signs that we could continuously go down. And again, if you take a look at where there's a possibility of there being a lot of stop losses, or where there's a lot of liquidity, that's where this comes into play. So I think we could take out the lows right here and Bitcoin to keep pushing to the downside. I think in between around, let's say, 28,500 is a decent price for where I think that Bitcoin can go, because the bullish sentiment has kind of already been taken out. Now, that was my analysis on Bitcoin, kind of the short term of it. I'll keep you guys updated daily on what I think's happening, what is happening with price, but that's kind of what I have. Now, so some important macroeconomic data that came out, and I know this is kind of like the boring stuff, but it's very important to understand what's going on in terms of what the Fed is going to be doing and what our macro data is telling us, because this does correlate heavy with what could be happening with Bitcoin's price and also just the stock market in general. So we just had a jobs report come out where payrolls rose to 209,000 jobs in June. Now, this is less than expected, and this is the first time that it missed its report in 15 months, which we'll go into in a little bit. So as you can see, the expectation was 240 jobs in June. It came in at 209,000. Now, one important thing, though, is that unemployment actually dropped by 0.1% down to 3.6%, which we'll go into the charts and talk about that in just a little bit. And another thing is that government hiring led the job gains. So when we take a look at all this, you can see that the U.S. added less jobs than expected in June. It's also worth noting that in the last 15 months, it's never done that. So this is the first time that it missed it in 15 months. And 28% of those new jobs was led by government jobs. So were the expectations a little too high, or is the labor market finally softening? Which we know that if you're looking at a recession, that's the last thing to go. That's the final lagging indicator. And if we take a look at the chart, so what I have pulled up here is initial claims. Initial claims is kind of like your first indicator for people losing their jobs, right? It's on a weekly basis. And typically what happens is whenever someone gets fired or loses their job or quits, they'll go to unemployment, and then they'll basically let them know, and then they'll take data of that and they'll see how that's happening. Now, you can see since September 19th of 2022, this has just continued to rise. This is a bad indicator, because as initial claims rise, unemployment will start to follow, because as more people are starting to file for unemployment, it starts to catch up with the unemployment claims. Now, a big thing with this is the first indicator to go. So as initial claims start to happen, obviously what's going to lag behind is unemployment. Now, you can see unemployment is just continuing to stay at these steady levels of below 4%, which is very important. However, whenever unemployment rises, you could see that in the past, typically what happens is it's kind of just lagging or falling, and then out of nowhere, like a rocket ship, unemployment skyrockets. You could see that in the pre-pandemic as well, where out of nowhere, unemployment just skyrockets. And so we're starting to see that as well, where obviously initial claims start to come in very hot, and that's the first indicator to go. And then obviously we know that unemployment rises very rapidly. When we go back to this Twitter post, we have to ask ourselves, were expectations a little bit too high? Did people think the job market was too hot? Or is the labor market finally softening? Depending on how all this plays out, if unemployment does start to rise at a very rapid pace, that's going to be very important, because that's going to direct the Fed in terms of how much farther are they going to raise interest rates, if they're done, if they pause, if they start cutting rates. That's really the two big things with the Fed, is that they either want to keep inflation low, but they also want to keep unemployment low. So if unemployment starts to rise, they're also going to have to consider, okay, now we need to pause rates, or we need to start cutting rates to help the economy get back on its feet. And again, that type of data is very important, because if the economy starts to drag down, no matter what the assets are, so do the assets follow the economy as well. And this will be Bitcoin's first actual recession, right? It was born out of the global financial crisis, but this will be its first real test. So it'll be interesting to see how Bitcoin fares with this. Obviously, on the shorter time frames, I think we could fall, but when we're talking about years and decades, obviously we all know where Bitcoin's price is going, and that's only to the upside. But if you guys enjoyed this video, make sure to leave a like and subscribe so you can stay up to date on these types of videos. And until the next one, I'll see you guys then.